a fundamental thing really is confidence. Markets operate on confidence. If people have confidence in the economy, in our markets, and in our ability to maintain a platform that supports just and equitable principles of trading and is fair to everybody, then they would come in knowing fully well that you have integrity in the marketplace. So I think that is the first thing. And then the second thing is driving policies that make it easier for people to access our markets in such a way that they can derive value and extract that value in a seamless way.
What are you asking of the capital markets? You've got them here in the room here. Let's keep this simple. What do you want them to do to help you?
I like the way you put it, but I think it's rather not to help me, it's to help us. Okay. The bottom line really is first to understand the shared responsibility that we have in our nation. The government as the facilitator and the enabler for private sector to do exactly what it exists to do, which is to drive growth, to drive development, to drive employment, and so on and so forth. And what we expect to see is more involvement in the enduring investments that the nation needs in terms of infrastructure.
From that perspective, what have you seen? What can you tell us that we can take away?
I think a development of the fund capital markets is important, a development of the loan and project finance capital markets with maybe multilateral organizations. And then I think back to Oscar's point about integrity, market surveillance, market structures, the two exchanges are here to provide that sort of safety net, a systematic way such that investors' capital in these countries, in these nations, is safe and secure from an international perspective.
Can we talk about debt? IFC, to sort of comment on debt and also give her a perspective on what you've heard so far.
It's not that the debt itself is too high, it's the revenue base is too small. And so, again, over the next few years, when you couple having a large focus from government on tax compliance, that is key. I think there have been a lot of important efforts there. A lot more needs to be done. Then you get to tax reform, and then you start to see a balancing of that. And so then Nigeria's debt profile doesn't look so scary because you have enough revenue to justify all of the debt that's necessary to drive the infrastructure development that will be important for Nigeria going forward.
We're borrowing, but my concern is at what cost are we deploying this infrastructure?
What you hear is, government shouldn't borrow because they are mortgaging the future of your children. Then here, government shouldn't increase taxes either. And yet, government should provide services. From which resources? This is a matter we must have consensus about. And those who know must stand up and speak up. First, that there is nothing wrong with debt. Secondly, good debt is debt in investment, in infrastructure. Economies where people own homes are economies where people borrow to buy houses. You don't buy them cash and carry.
Is that the reason why they went from a 10-year bond to a 20-year bond? Because I think up to about 2010, it was that was the situation. Was that the reason?
What government has done is to move more of its borrowing international and leave room in the domestic market for private borrowers. And that's to do a number of things to reduce borrowing costs.
We're talking about how we can drive global capital for growth development, not just in Nigeria, but across Africa. What are your thoughts?
As a continent, we can only go thus far if we are able to trade with one another.
Give us the shortest description of the laws, the Investment Securities Act you've ever given.
The SEC, along with other stakeholders, have just, concluded the process of reviewing the law. And the reason for that is to make the capital market more robust, to make regulations stronger, to bring about transparency and to see that we have a full complement of what it takes to build a world-class capital market.